Hey everybody, Boris, BK Forex. Welcome to the weekly technicals for the COM dollars for Aussie dollar, dollar CAD, and Kiwi dollar from May 7th, May 11th, 2018. And the story in the COM dollar land is one of end of the week relative strength. It's mild, but it's definitely there. And I think the critical reason for why we're seeing COM dollar relative strength is the suspicion that U.S. short-term yields may not go as high as the market originally thought. That's really the big competitive advantage that Aussie and Kiwi have had. And if that becomes more of a confirmed thesis as we go forward, in other words, perhaps the market completely re-rates the idea of rate hikes to only 2 this year, that certainly provides a boon for the high yielders of Aussie and Kiwi. And that, I think, has been the biggest story. Now, as far as levels go, we're pretty much staying at the same levels as last week. We held the 75s in the Aussie. We held the 70s in the Kiwi. Kiwi is 70-72 range still, 75-77 in the Aussie. The interesting story, of course, is the CAD. The CAD has been topping out at the 129 level for a good 2 weeks. And I've been talking about the fact that I really like the fact that 129 is holding. And that suggests that maybe dollar CAD has more downside to go. But it is a two-way street. I'll show you on the charts why you have to be kind of careful. And it could trap the bears if they're not careful about this particular trade. Let's take a look at the charts first. And, excuse me, let's take a look at the calendar first and just see what's on the calendar as far as the COM dollar goes. We have Australian retail sales will be mildly bullish, that data point. And of course, after that, we have the RBNZ rate decision on Wednesday, which will be interesting. They're likely to remain neutral. Really haven't seen stronger activity offset by weaker CPI. It'll be interesting if they dismiss the CPI, they'll be certainly bullish the Kiwi. But overall, nobody was really expecting any fireworks from RBNZ. So it should be interesting as far as the data set goes. I think a neutral stance probably keeps it at 70 if the RBNZ in any way, shape, or form suggests that the inflationary pressures are temporary and that they're generally upbeat about the economic data. Then we could certainly see a rally to 70 to 71 on that. I still like the Kiwi as a relative strength trade on a lower volatility basis than anything else this week. And then end of the week, we have the Canadian data, which is very important because the Canadian data actually is going to be the pivot point between this 129 as a turning point to the downside, or perhaps a trap for the bears and a move back up to 30. So the market is looking for about 19K against 32K. We're actually dovish. We dovish loony. We think because of the IB PMI, employment could be a little bit lower, but IB itself and generally activity and GDP and all the other things within the Canadian economy have been strongly higher. Oil prices have been higher. So I would take our view with a grain of salt right now and just simply let the data speak for itself. If the data is relatively strong, I think it breaks the back of that 129 and we have a much stronger move to the downside in dollar CAD. Let's take a look at the charts here. And we'll start with dollar CAD first because you can see this has been a two-week churn around the 29 level. Every time we hit it, it comes right back off. However, and this is the interesting point, if the data is bad and if the 29 gets taken out to the upside, the squeeze here, the short covering squeeze, could very quickly take us to 130, perhaps even 130.50 before it exhausts itself on a double top at 131. So if we are 129.50, I would not want to be short this thing. I think the maximum I would really want to be short against this is 129.50. After that, the short squeeze could really take you much higher. So therefore, still looks good to me as a distributive trade, and any break below 128 certainly would seal this top over here and give us a good chance to move towards the 127s. But just be wary. There's always a possibility of a flip here, even though we've certainly built a lot of resistance here. And the path of least resistance is to the downside in the caddy towards the 27 as the COM dollars really come back. Same kind of story in Kiwi, not as strong, but Kiwi definitely held the 70. 70 has been a very, very strong support level. We've been talking about that for quite a long time. It's really 69.70, but this has been a very decent test here. And as long as we kind of hold the 70s, we have a natural, easy trade back up. What would drive this trade back up? U.S. yields compressing, U.S. CPI inflation data coming in a little bit softer, market basically repricing the idea of 3 rate hikes, completely destroying the idea of four rate hikes. All of that is positive yield to Kiwi, positive carry to Kiwi, and that puts us towards the 71 level. If you combine the two, if you get sort of a double whammy combination of weak U.S. data with a mildly upbeat RBNZ, or just at least not a dour RBNZ, the chance of 71 this week is pretty real. So I really like this to the upside on a spec basis as a low volatility way to trade the dollar profit taking move. Aussie, similar kind of a story. If you get positive data out of Australia, that certainly helps. RBA, of course, was neutral. Nothing is really on change in monetary policy. This really always simply becomes a short cover or profit-taking move on a dollar that takes us back to 76. 75 definitely held, and 3 or 4 days of holding suggests that we should be able to trade back up if we get any kind of dollar weakness. Generally, my point is, I think if you want to trade a low volatility way of profit-taking in a dollar, it's the Aussie and the Kiwi trades that offer the least amount of risk opportunities as we go forward. So that's how the week shapes up. I wish you guys the best luck, the best trading. Boris, over and out.